Dear students, welcome back with another important topic discussion. Today we will be discussing the chapter number 4. This chapter is called Budget, Beginning Balances and Prior Period Adjustments. So before we come to the discussion of the chapter, first thing what we need to know whether we have completed the chapter number 3 and then whether we are having that backup file available. To do that, first of all, you need to open up your Peachtree program, right? So then you have to restore the last backup file which you have saved after the chapter number 2. So for that purpose, you should go to the restore command and then you have to find the place where you have saved your backup file. So if you have saved the last backup file for the chapter number 2, then that will be there in a particular place with the given date. So your company name and the save date will be available to select the particular company last backup file. So if you highlight that and then go to the open command and then click the next button, you will be coming to the select company window, whereby we need to select a new company uh, new company option, because that is the option you need to create. Then you have to go to the next command and then go to the again next command, no need to tick anything, and then go to the finish button. That will bring your last backup file to the screen, which will shows the name of the company which you have created at the top of the title bar. Now here you can see the company name is APMA 2020 Private Limited. The BCom students who open up the last backup file, you can see BCom 2020 Private Limited, right? So that is the last version of the backup file. Then by using the two lectures, lecture number 2 and lecture number 3, you have done some activities. Now, first of all, under the lecture number 2, we have created our own company profile and the company accounting system. So, to check that, we can go to the maintain main menu command, and from there you can select the company information command, which will help you to modify and also to see all the information you have entered when you are creating the company. This information always can change. So click the company information button. Then you can see your company name, your company address, and the company contact details, and your registration number, your website, email address, and the type of your business. Now your company is a limited liability company. Other than those things, anytime you want to change, you can change, modify it, and after modifying it, you can click the OK button to reset the information. Now, one thing which cannot be changed is the method of accounting. As you can see at the initial stage, when we created our own company, we have selected the company is going to use the accounting method called accrual based concept. So that cannot be changed now. Okay, that cannot be changed now because it's a fixed, and you are not supposed to change accrual to the cash to the accrual time to time. So that is prohibited. So that's why it is not allow you to change the accounting method now after creating your company. And meantime, the posting method we have told real time. Still, we have an option whereby we can change this real time posting method into the batch posting if it is required. So this can be changed now as well. These are the main information what you have created using the chapter number 2. Other than that, you have set your financial year, which also cannot be changed now. How to check your financial year? If you come to the small toolbar at the top, there are two different type of date calendars available in this particular toolbar. The first one is the system date. System date generally take the current date of the computer or the current working date of the system, and the period is the one which you have created. So this is the period which we are going to work with our company. So to check that, you can click the period 1 command. Then you can see the particular schedule will get open. Your physical period, as you know, this particular package always opening up 2 financial years. So you can see your first financial year need to be starting from the 1st of April 2020 and it will end up 31st March 2021. So if the financial year set as this, that is correct. If you have a different type of financial year set, that means you have not corrected your company properly. And also remember, this cannot be changed now. So if the students are having some kind of error at this moment, what they need to do, they need to recreate their company using the handout number 2 given to you, or the chapter number 2. These two items, the method of accounting, accrual base, and the financial year, fiscal year of the business, need to be the 1st of April 22 to 2022, 31st of March 2021. And also it open up the second financial year. Currently it will show you the first period. First period is the working period for this particular company. So if you have all this information, that means you have completed the chapter number 2 handout perfectly. There are no errors in your chapter number 2. Now, during the chapter number 3, we have discussed how to create the general ledger. You have been given full knowledge about the coding system. So, what are the accounts types available? What is liability? What is asset? What is equity? What is income? What is expenditure? Those things all knowing by you, but still we have explained how these things will be absorbed by the computerized environment when it's converting the manual system into the computerized accounting packages. That was given in the chapter number 3. So to check your chapter number 3, at the end of the day, we have already shown how to create the ledger accounts to your company, and also we have shown how to modify the ledger account by using the various modification options, such as deleting the unnecessary account, modifying the name of the account, modifying the type of the account, how to modify the account numbers, and also how to create the new accounts. All these things were discussed and also completed during the lecture number 2 or the chapter number 3, which has shown you how to create your general ledger. And meantime, everyone need to complete, and you got the final backup file whereby this particular chart of account, that we call commonly chart of account, collections of account related to the particular business called AFMA 2020 or the BCom 2020 Private Limited. So your chart of account can check now. There are various ways which you can check your chart of account. One method which you can access to your chart of account what you have created by using the list command. List command help us to list out anything. Any customers, any vendors, any employers, any chart of account is the one we want to see now. At the moment we have created only the chart of account. So if you click the chart of account command under the list, that will open up the created chart of account. At this time, everyone need to have 40 adjusted account. Initially, you have created 42 account. By doing the modification, we have learned how to modify, how to change the name, how to change the code numbers, how to change the type, and also how to delete the unnecessary account. So by doing that activity, finally, this particular company like AFMA as well as the BCom, we reduce the account numbers up to 40 account. So all of you now need to have all these 40 accounts available in your open file. And meantime, very important to check your type of the account. So based on the type what you have selected, this particular account will appear in a particular place in the balance sheet or in the income statement. Now you can see at the top, you can see the fixed asset accounts. Also, you can see the category called accumulated depreciation accounts. Now, as you know, when you prepare your balance sheet, you need to calculate, you need to take the cost of the asset, and from that we need to deduct the accumulated depreciation, whereby we can reach to the book value. For do this, we need to have a contra asset account. So these accumulated depreciation, which is going to appear in the asset side of the balance sheet, but it carries the negative value. So you can see in your trial balance, once we are going to enter the beginning balances today, these things will appear like a negative values in your asset side, which will reduce the cost of the asset and adjust that as a book value of the given asset as a given time. So accumulated depreciation account, then the type called other assets, those are the patent rights like long-term assets. Then we have very specific categories related to the current assets. One category is called inventory. So the item which you are going to purchase for the reselling purpose need to be accommodated within this particular category, right? So the inventories are the item held by the company for reselling purpose. So you need to make sure that you are going to select the category type called inventory to make adjustments to this particular account. Then the very specific category for the account receivable, that means the customers accounts. All the customers who are going to purchase the item from us need to be accommodated within this category called account receivable. So that specific category is open up for the very specific purpose of selling the items and collecting the money from the customers. So it need to be the account receivable category. Then you can see the other receivables we can put under the other current assets. Any other receivables which you have to receive from the various other sources, then you can put that under other current asset, because these are going to be the short term period. And again, you can see the cash and cash equivalent account. Cash and bank account need to be categorized under the category type called cash, because once you are going to do the transaction within the banking module, these cash accounts need to be there. Otherwise, you cannot see these accounts within the banking module. So all cash and cash equivalent, including the bank account, need to be created under the cash category. Those are the asset accounts available in your company, what you have created. Then you can see your accounts payable. This is another specific account. This is handling your vendors. All the item purchased from the vendors for the reselling purpose need to be accommodated within this particular category called accounts payable. So all the vendors who are supplying the goods and services for the reselling purpose, that need to be accommodated under the accounts payable. Then there can be several other payables which we have to make to the outside parties. Those can be taken like a other current liability. Then you can see the bank loan which was taken for a longer period, more than 1 year, that goes like a long-term liabilities. Those are the liability accounts available in this company called APMA or the BCom. So that is the company. Then very specific three accounts which we have created. Those are capital accounts. Now what are those capital accounts? Stated capital, that is the investment made by the owners, right? Share capital of the owners. These share capital need to be accommodated under the category type called equity does not close. Equity does not close. What do you mean by the equity does not close? Equity does not close means this particular account is not going to close the amount value at the end of the financial year. It is going to carry forward the value for the future period. So the share capital cannot be closed, right? Until the owner will withdraw their capital. So until that will be carrying forward for the future period as well. So that's why the share capital account cannot be closed at the end of the year. Then you got the very specific account which is called retained profit or the holding profit. As you know, this is going to be very specific account where all the accumulated profits are going to be accommodated. So this particular account need to be categorized under the category type called equity retained earnings. So that is the type which you have to use to accommodate this account. And also remember, during the last session, the discussion with the last lecture, you learned that you cannot create two accounts under this particular category called equity retained earnings. Equity retained earnings allows you to create only one single account. So මෙතනදී පුතාලට බෑ ගිණුම් දෙකක් හදන්න මේ කියන type එක යටතේ. Equity retained earnings කියන category එක යටතේ ඔයගලන්ට හදන්න පුළුවන් එකම එක ගිණුමයි. ඒක තමයි holding profit එක. එහෙම නැත්නම් retained earnings of your company. All the accumulated profit generated through the activities you carried out will transfer into this particular account automatically by the system when we are going to close the year. When we are closing the year, the profit or the loss generated during the particular period will be automated and transferred into this particular account. So that is called retained profit or the retained earnings or the holding profit account of the business, which is going to be used to pay the dividends as well to the shareholders. And then you can see the general reserves. Now sometimes companies creating reserves for the specific purposes. Now these reserve accounts also not going to close at the end of the year. So this is again carry forward value until you will be utilizing that particular reserve for the specific purpose. So you will have to select the type called equity does not close. So there are two accounts under the does not close category for this particular business, that is stated capital and also the general reserve. And very specific category called retained earnings is a one account is accommodated. Then you can see some of the income accounts what we have created. So we have created at the moment four different type of income accounts, which include the sales, training income, interest income, and the other income. So you may require to create more and more income account once the process started, and when you run in the business you may be getting new incomes, whereby you have to accommodate that within the given chart of account. As you can see, we are keeping a huge gap between the accounts, whereby we can accommodate various new accounts within the given range, right? I'm not going to talk about the coding system, that was very comprehensive discussed during the second lecture. So I'm just refreshing your mind by talking about the few things related to the last lecture. Then we got a cost of sale account. As you know, this is a perpetual method of accounting using by this particular system. I believe you can remember the two method of accounting. One is called perpetual method, other one is called periodic method, right? So what is the difference between the periodic and the perpetual method? Periodic method can be used for the manual accounting system, whereby at the end of the year you take the physical stock count and then you maintain only the purchase account to handle all the purchases and make the adjustment using the adjustment entry at the end of the year to find the cost of sales related to the item you sold. But in a perpetual method, transactions, once the transaction happen, for example, the sales happen, and immediately cost of the item which was sold will be calculated. So that means we are not going to maintain purchase account for this purpose. Anything you purchase from the vendor directly debited into the inventory account or the stock account and credited into the vendor's account. And at the time when you sell that item for the selling price will be recorded into the sales account, and if you are receiving the money into the cash account, the other side immediate calculation of the cost will be calculated. The cost of the particular item sold will be credited into the stock account, and that will be debited into the cost of sale account. So according to the perpetual method, you don't have adjustment entries at the end of the year to adjust your cost of sales calculation. So that's why we have a specific account called cost of sales. Then you can see the range of various type of expenditure account, which I don't have to discuss with you, right? So these accounts at the moment you have created, I just refresh your mind by explaining few things relevant to these accounts, right? So at the moment you can see the running balances are zero. By the end of the day, once we finish today's discussion, you can see the balances available in these accounts, right? Generally, when you open up your financial year, you don't have any balances in your income, cost of sale and expenditure categories of account. Only the balances can be there at the balance sheet account, which is called assets, liabilities and equity categories. Other than these three categories, none of the other accounts are not going to carry forward the balances. As we have discussed, all the differences available in the income expenditure will be close to the equity account, retained earning account, which will be taking the difference between the income and expenditures within the given financial year. I hope you got a good idea and you have checked your account now. By the time you check the types, whether the types are very accurate and correctly made, because depending on the type selection, these accounts will be appear in a different places. If you have wrongly selected income account like a liability, it will appear in your balance sheet. If you have selected cash account like income, it will appear in your income statement. So that is the dangerous situation. That's why development of account is the duty of the accountant. Accountant knows which account and where this account need to be appear at the time when you are going to generate your financial statement. So it's a responsibility of the accountant. So that's what we are talking. We are telling the development of the software package related to the given business organization is the responsibility of the students who are learning accounting. who knows what you mean by assets, who knows what you mean by the liability, who knows what you mean by the equity, and what do you mean by the income, and what do you mean by the cost of sale, what do you mean by the expenditure. None of the other people cannot be design this. And also in the last lecture we have decided this particular business is having divisions, and we are going to extract the divisional financial statement. So that's why you can see two-digit code is used to identify the division. So we have two division. One is the clothing division, other one is the training division, which help us to see profit and loss statement of the training business, as well as a separate profit and loss statement of the clothing business, and the overall profit and loss statement of the AFMA 2020 or the BCom 2020 Private Limited at the end. So that is called divisional or the segmentation of account. So please check whether you have this final backup file according to this. Now, if you have that backup file, we are ready to start today's discussion. I hope you got the idea, right? So everything need to be there. At the moment, if you have all these available, that means you are ready to go for the third lecture or the fourth topic of your handout, which is called budgeting, beginning balances, and the prior adjustment, which is the chapter number 4 of your lectures. Then we will move on to the chapter number 4, the budget, beginning balances, and prior period adjustment. I hope everyone knowing these words. You know what you mean by the budget. So every business organization, before they start the financial activities of the particular business, they can prepare their budget to forecast what they are going to do for the current fiscal year. So they can prepare budget prior to start their business activity. In this situation, you know how to prepare the manual budget. You have used various methods of preparing the budget, incremental budget, zero-based budget, and various other type of budgeting techniques. What you have learned in the management accounting subject is now useful to understand and do the budgeting part in the computerized environment. So you can see how we need to prepare a budget using the computerized environment rather than the manual system by using this particular lecture, right? And also, you know, at the beginning of the year, you need to have some beginning balances. Generally, beginning balances are carry forward balances related to the assets, liabilities, and equity account. You cannot have a carry forward balance for the income and expenditure category of account. But if you are converting your accounting system, manual accounting system into the computerized environment at the middle of your financial year, then definitely as at the given date of the conversion, you may be having not only the asset liability equity account, you may be having many income and expenditure accounts. So those accounts are also need to be entered into the system. That's why generally it is not recommended to convert manual system into the computerized environment within the financial year. It is better you can complete your financial period using one method, and then before come to the next financial year, you have to convert that method into the computerized environment. By doing so, you will be able to run your business in an accurate manner, because when you convert that in middle of the financial year, you need to enter all the invoices, all the purchase orders, all the purchase invoices, all the cash receipts, all the cash payment you made within that particular period, right? That is very dangerous. If you miss one thing, that will create wrong information to the user. So it's good you have preparation time required, whereby you create all the modules what is required to run the business activities of your company for taking few months, and then we wait until the financial year is going to end as a given date, and then you finalize your final account and get the final balances of your assets, liabilities, and equity account by closing your financial period and feed that into the system. And from that point, you will be able to run your day-to-day activities without any hustle and bustle using the computerized environment. And also there's a third area which we are not going to discuss actually, prior period adjustment. You all know sometimes after completing the financial year, also when you are running the next financial year, you may find the certain adjustment entries or something wrongly what we have done for the past final year activities. So in that situation, we cannot open a new account because this particular transaction belongs to the last year. So at that situation, how you adjust in the manual manner? When you come to the prior adjustment for the last year transactions, you should take the accumulated profit account and make the adjustment according to the particular situation. If it is an increase of the profit, then it need to be added to the retained earnings account, or if it is a decrease of profit, then that will be deducted from the retained earnings account. So that's why this prior period adjustments need to be made only for the equity category called retained earnings account, right? So similar manner here also in the computerized environment, if you found something like that, you should go back and you take the capital account like a retained earning account and make that adjustment to that account and sort out that problem, right? So initially we don't have that problem. Now the lesson outcomes, as you can see, the chapter number 4, we expected you to understand the whole budgeting process and the way how you need to prepare the budget, and then how to bring information into the future periods, as well as how to readjust those future information by using the different techniques we call adjustments of balances, right? Then, adjusting the budget information is another thing which I told you, and how to enter the beginning balances into your general ledger accounts we will discuss, and also we will see how to generate the budget and trial balances of your company after completing this particular lecture, because this is the lecture whereby we are going to start entering the transaction. First transaction will be entered like a beginning balances to your accounts. Once you entered that, the whole system is locked and we need to carry out our transaction according to the given adjusted dates, right? So that's why the date, what I have shown you earlier, is a crucial and important for this particular lecture. If you have the wrong things there, now you have to adjust it, right? So let us start first of all looking into the budgeting section. So to do that, we need to know what you mean by budget. You all know budget is the quantitative expression of the proposed plan of action of your management for the future specific period. So each and every business organization is going to prepare their own plans, how they are going to generate their income for the current financial year. So prior to start the financial year, you go for the market survey, maybe gather the information from your customers, do various kind of analytical techniques use, and find and get the information and prepare the budget for the future period. So that shows how you are going to work, and also it will make as a controls for the handling expenditures. So you can say, okay, you have exceeded the budget limit of your advertisement expenses. We cannot give any more expenses for the advertisement. So these kind of controls can be done if you have a budget. So that's why budget preparation is very, very important. But in our lecture, we will be discussing how to prepare the budget for a very small section. But when you are creating the budget for the company, actually we have to create budget for the whole area. So that is the thing we are going to start for the today's discussion.